Okay, sorry. Hello, fellow splitting geniuses. Welcome to another live of Splitting Smart episode. I am Lila Aiken Ali, a divorce coach and the co-founder of Split.fyi.
Lila, we're not.
I didn't see that.
We're good. Go.
Yeah. Hello, fellow splitting geniuses. Welcome to another live of Splitting Smart episode. I am Lila Aiken Ali, a divorce coach and the co-founder of Split.fyi. My business partner, Heather Steer, and I welcome candid and informative discussions with divorce and well-being professionals. And our goal is to educate you around anything divorce, division of assets, and support you so that you can unhitch with your hitches. Our topic for today will be around creative financing and problem solving. We like to hear that. We will cover aspects of mortgage lending, refinancing your home, and down to what terminology you need to understand, like underwriting. Our guest for today is Matthew Schwartz from Nationwide Mortgage Bankers, who is a mortgage specialist serving states across the country from California to NYC. His goal is to educate clients, create an enjoyable experience while financing a home, and help them find a mortgage that suits their individual needs.
Yes. Thank you for joining us today. And we've had a lot of conversations around the house, and that being one of the largest assets that involved in a divorce, and discussions around who has the ability to keep that asset. And particularly when someone may have been out of the workforce for a while, or relying on child or spousal support for their financing needs. And I always recommend to my clients, the first thing that they do is go get engaged with someone involved in the mortgage industry. But there are so many different types of places and mortgage solutions. You can go to your commercial bank, you can go to a broker, you can go to someone who does both. And so I'd like to start with sort of, where does someone begin in this process of, and at what point in the process should they get engaged with someone?
Absolutely. And thank you all for having me so much. It's a pleasure to be here and see you guys. So thank you again. Great question. And by the way, thank you for the intro. Yeah, I think the best thing for someone to do is start immediately, just jump right in. It might seem very overwhelming if someone's never gone through that, or if they are going through personal things where they feel a little lost, whatever the case may be. That's what we're here for. So I would say, just jump right in. What makes, you're looking for somebody that's been in the industry for quite some time, hopefully that has some more creative financing than your typical Wells Fargo or Bank of America. Not that those aren't good places to go, but a lot of times, depending on the scenario, we offer more of a creative perspective, more of an educational perspective on how to actually get through this process. One thing I want to point out is, a lot of times, just because you're going to speak to somebody, that doesn't mean you have to move forward in the process. There's no cost to it. It's good for you just to get just to get the ball in their way, so you know what your options are, right? And more than likely, you're going to hear that advice from an attorney that you might be dealing with, or a coach that you might be dealing with, or maybe a community that you're a part of. And they're going to hopefully recommend that, you start that process sooner than later. And a lot of times we see people that are, once they get started right away, it kind of just releases that not knowing what to do, if you will. A lot of times there's different options. And that's why I was saying, from an educational perspective, you want to know what your options are. Do you have to sell your home? Do you need to refinance your home? If you don't have income, or you haven't had income for the last 5 or 10 years, what do you do in that situation? If you have a lump sum of money, how do you manage that money in order to invest it properly? How do you protect that money? How do you protect yourself in this scenario? How do you make sure that your credit is in the right place it needs to be in? How do you know that you're buying or refinancing with the right program? So all those things, in addition to a lot more, are things that we're able to help with. And I think that, again, going back to your initial question, it's just, again, I don't want to say just jump right in, eyes closed, but jump right in, eyes open, so you can start to educate yourself on what your options are. I think that it's obviously a stressful thing for a lot of people. So we're here to help really walk you through that, whether it's creatively, whether it's strategically, be there from start to finish. And even in that process, let's say that, you, by the court says you need to buy your old spouse or whoever the case may be, you need to buy them out of the property and you need to refinance, but you don't have income. There's creative programs we have for that, or you might not be ready to do that. So we'll coach you through that and help walk you through that process as well. Hopefully that gives you an overview of some of the things that we can do. I can go into some other stuff, or what do you guys think?
It is so important to engage early on and to partner up with someone like yourself to look at how is your asset split going to look. And so that because you could say, hey, actually, if you took only part of this debt and, offset it and gave the person this other asset so that your portfolio or your balance sheet will look better and your income statement will look better for financing purposes. And
Sure.
so, you're a great expert to talk to around what are the settlement implications when it then goes into a financing situation. So I think that's so helpful.
Yeah, and those are things we can explore. I think it's important to understand what your position is when you have assets like that. So they're being used to the maximum, if you will, especially if you're in a situation where you don't have any other income, or you do have some income, but it's not necessarily enough to cover a mortgage payment or whatever the case may be. What is the best living scenario for you when you do have a lump sum of money? Is it buy a new home? Is it rent? Is it rent for a little while and get back on your feet or up on your feet until you can afford to make the monthly payment that you want to make? So those are all things we can get into. One thing I'd like to point out, though, is, again, back to your first question, when you start, the reason I say you want to start right away is you're going to hear a lot of different things within the industry. So, for example, like I mentioned, if you have that lump sum of money and you walk into Bank of America, but you don't seem to fit into their box, then they won't even advise you. They'll just say you don't qualify, sorry about that. Or maybe they will, I don't know. But for the most part, if you don't fit within their guidelines, there's not much they can do to help. With us, one of the things that separates us from that and hopefully gives you all a home and make you feel more comfortable is that we are an actual mortgage bank. We're not just a lender or a broker in the sense of, we have specific programs that are creatively designed to get people in homes or into the best situation that are going through like what you're talking about, and making sure that the finances are divided properly and used properly. You also want to make sure, and you guys would know a little bit more about this than I would probably, but you want to make sure that when you are buying a home or refinancing a home, that you're careful with how you show your income, because the court might say, well, how are you going to afford a $2 million home if you don't have a job? But all of a sudden you can make a $2 million mortgage payment. So there is those creative things that come up that we should probably address in order for you not to get yourself in even more trouble just because you want to have a $2 million home or 5 million, whatever the number is, right? So those are the types of things that we would educate on, and again, be there strategically to walk you through that process. And when it comes to the assets, just making sure that they're protected and used properly, because who knows if that's the one time you're going to get that asset, or if it's a reoccurring thing. It just depends on the scenario. But yes, those are great questions. Hopefully that helps.
Yeah, every situation is so unique when it comes to this and how it's going to get split. One of the things that you and I had talked about before that I really appreciated was that you're very realistic and you're very honest with, look, we could probably do some creative financing and figure something out, but 12 to 24 months down the road, either A, we're gonna put you into a different product in order for it to be, more of a long-term scalable thing, or scenario B is you're going to end up losing your home. And that's not good for either of us. Like, you are on the hook then for paying back and dealing with the fact that you now have a foreclosed situation and they lose their house. It's not good for either party. So I'd love to hear a little bit more about how, you have those conversations and provide that perspective for people.
Yeah, no, thank you. That's a great question. I think, or a great point, I should say. I think the biggest thing when it comes to that is just understanding what your true options are based off what your real scenario is, and being realistic with it. I understand that sometimes it's hard to part from a home you've lived in for 5 or 10 years. You've raised children there, maybe you've had whatever the case may have been. You have memories there. Maybe sometimes you want to like just get rid of all those memories and move on, or sometimes you don't. I don't know, but those are things. Those options are really important, and it's really important that we get creative with them to make sure that you are in the right scenario. You bring up a good point. If you do have, you have to qualify for the basics of the program, right? So you have to have down payment money. You have to have a certain credit score. As far as the income goes, we can get creative there. But one thing that we pride ourselves on is, like you said, being honest and being transparent with our clients. And really, I should say our relationships, because they all turn into people that we have long-term relationships with. This is not you saying we're going through a situation, I need your help today. This is you coming and developing a friendship with somebody that's going to help you through a long period. It doesn't have to be just this part of your life. Yes, we'll help you with this part, but moving forward, we're always going to be there for you. So it's important to understand that we will do what's best for your scenario. And to your point, we'll get you into a home. And if it's not the ideal situation, we'll recorrect that when the time is right, when you're maybe back on your feet, or you can show more income, or whatever the case may be. But the first goal is to really educate you on what your options are, make sure that we put you in a scenario that that fits well with your current situation, and make sure that we don't set you up to lose a home or mess up your credit, or put you in a worse, set you up in a situation where 12 months down the road, you're in a much worse situation. That's the last thing that we ever want to do with anybody. And because of the fact that we are our own bank and we do lend our own money and we do have in-house underwriting and processing, we're able to get more creative and more flexible on those product sets in order for somebody to fit into something that's more unique to that individual, or that specific scenario, and then come back and recorrect it, or correct it, I should say, down the line when it makes more sense. So again, I don't mean to be repetitive, but it's more about just really looking at your whole entire scenario, feeling comfortable that you're with somebody that's going to educate you and be there for you and put you in the right situation. So that way you don't lose a home, you don't waste the assets, you don't make your current situation any more difficult than it already is on yourself.
Yeah.
You said something, and in fact, I want to, two things I wanted to touch point on. One was credit score, and the other was underwriting. So for a non-seasoned, lender, or a non-seasoned person who's like, doesn't understand what to
What
do.
does that mean? Right.
Yeah, like what does it both mean? And also the fear of not having a high credit score. How we're not having one pretty much at all, basically. You've
Sure.
been under your partner's credit cards, you've been under in a family. So how do you create that, and how much help can you give your clients in doing so? And then I definitely want to touch point on the underwriting, and like what do they need to understand about that and prepare for?
Sure. Great questions again. Thank you for that. When it comes to credit score, surprisingly, a lot of people, if they're not already familiar with how credit works and what their credit score is, if they've been in a situation where they were married and they're like a co-signer or have their own credit cards, there's going to be some things that you're going to go through, obviously, in that separation or that divorce. With that being said, more than likely, until payments are not being made or certain things are happening, you're probably going to have the score to qualify. Just to give you a little background on how the credit scores and how they work, as far as the basics of it. In the mortgage industry, all companies, whether it's Wells Fargo, Bank of America, our bank, whoever it is, any lender, they grade you when it comes to residential mortgages, primary residence, investment properties, things of that nature. They grade you on your, there's 3 credit scores, there's 3 bureaus and 3 companies that report. And the way that we do it is we take the middle of those 3 to qualify you for the loan. So your credit score can range from anywhere from below 500 all the way to 840, 850. If you're somewhere in the 680 and above range, we will have zero problem qualifying you. Now, again, we'll get into more of those details later if anyone has any questions or they want to discuss it. But just general rule of thumb, if you have what is considered to be a 680 or above, you'll be fine. Now, how do you get a 680? What does that mean? You have to have X amount of lines of credit. Typically, the banks like to see you have 3 different lines. And what I mean by lines would be a credit card, a car payment. You could even make your cell phone report on credit. You could have a mortgage report on credit. You can have you could even have your electric or your power bill report on your credit if you call them and purposely have them report it. If you don't have any credit and you can't qualify for credit, you can go to the bank and do like a prepaid credit card. So in other words, you give them $1,000, $500, whatever the number is, and they'll give you that much credit, and you use it as to establish new credit. And so we can help with all of that. We do have a credit department, if you will, that literally like focuses only on credit and credit scores and making sure that your scores are up to where they need to be to qualify for a loan, or the best scenario, maybe you have to go get a new car. Obviously, we don't do car loans, but we'll help you with your credit. So that way, you know that you're going to qualify for that car or that house, whatever the case may be. I would love to go into as much credit history as, whenever, if anyone has any questions, but is that okay for the basics of what we're looking for?
Great. I think that,
Okay, cool.
if people want to have more information, they're going to know how to find you and they can
Okay.
dig deeper into that. But I think that already dissipates a lot of the angst because, looking at 680 is more doable, and getting up to there is more doable.
Absolutely.
Everyone's an 800 score.
Yeah.
How do you
And,
start from scratch and get an 800? It's pretty
right.
hard.
And just FYI, there is the ability to qualify for a loan with under 680. That's just general rule of thumb.
Yep.
Typically, we can go down to a 580. I don't like to promote that because it's not always the prettiest product in the world.
Yeah.
But if you have to get into a house, we can make that happen.
Right. Good to know.
And
Yeah.
it will influence like maybe your interest rate, or it'll influence,
Correct. Yeah.
the loan, or you'll have some different levers that go with, when you have.
Absolutely.
lower.
Yeah. And just to touch on that real quick before we move on, the things it will affect, just so you know, as far as your scores, you're dead on. It's going to affect your interest rate. It's going to affect what's called your loan to value. And what that means is how much you can lend, or excuse me, how much we can lend versus what the home is worth. So for example, if the home is worth $1 million and we can lend you 80% loan to value, that's an $800,000 loan based off the $1 million valuation that the home is worth. So it'll affect those types of things. Typically, the higher the credit score, the better interest rate you're going to get, and potentially the more financing you're going to get. There is other factors that go into that, but that's specifically what the score of the credit does for you.
Great.
Yep.
And now,
Touching on about underwriting.
The fun part. The fun part.
Salespeople, the relationship people, and then suddenly you have to go to the back office and have it all looked at.
I mean, I get stressed out getting a car and doing this.
Yep.
I can only imagine.
Absolutely. Yeah, underwriting's always really fun. Let's start there. I will tell you one cool thing about maybe going through something like a divorce. I don't know how many cool things there are about it, but one cool thing about it is you'll have to get your stuff in line, right? You'll have to get organized. You have to know where all your stuff is. And a lot of times in order to qualify for a loan, you have to have that right paperwork. You have to know what your assets are. You have to know what your credit score is, and we'll help you with all that. So please don't think you have to come to us with all that information. But if you have access to it, we're going to eventually need it. So as far as the underwriting goes, it is usually the most tedious part of the process. It is really somebody looking at you on paper and saying, is this somebody that we want to lend money to, or is this somebody that they're not ready for us to lend money to yet? And we can circle back. With us, what's really unique and cool is, again, it's an educational process. We will educate you on it, but we'll also shield you from the things that you don't need to worry about. With that being said, we do have, what's cool about being a mortgage bank, specific mortgage bank versus, a regular bank, is we do have our own in-house underwriting. So we do have influence on how the underwriters look at the files, and we also have influence on exceptions that they'll make. The underwriting process is unique in itself because there's a couple ways to underwrite. There's a desktop underwrite, which means a digital one essentially, where we run your scenario through a piece of technology and it says approved or not approved, and here's why. We also have the ability to do a human underwrite, if you will, and that's when somebody underwrites your file. One of our underwriters actually looks at the file and underwrites it and final approves it. The things to be looking for in underwriting is just making sure that we are presenting the cleanest story for the underwriting. Is basically, we're telling someone a story and we need them to understand it. And if they understand it, then they'll say, yes, this looks good, let's move forward. Or this doesn't make sense. What's the solution to this problem and how do we move forward from there? And that's typically what underwriting means. Just to give a little bit more detail on it, the reason for underwriting is a lot of times loans are made and then they're sold to a secondary market. So other investors will purchase loans, and that's how they make money, is by buying them. The reason underwriting is important is because if the underwriter doesn't approve the file, then the secondary market won't buy that loan, which means somebody's stuck with it, and that can't happen. So essentially, all you need to worry about when it comes to underwriting, and again, we can go through this from an educational perspective, but just being transparent on the loan application, which is the first step of the whole process after we have our initial talk, and then going through and making sure we can provide the things we're saying. Again, because we are our own bank, we do have some very creative stuff that makes the underwriting process a lot easier. Typically, the underwriters, when it comes to what they're looking for, the main things that you're going to look for, if I had to make a bullet pointed list, would be what's the asset? What does it look like? So that means there's going to be an appraisal on a home. What is the home worth? What kind of shape is it in? That type of stuff. The second thing is going to be your credit score, which we just talked about. The third thing would be income. Now, this is where it gets a little tricky for a lot of people maybe that are going through a divorce, in the sense of some people may be the breadwinner. Some people may have never worked over the last X amount of years, which is normal. Please don't feel like you can't even do anything ever again if you weren't the one working. That's okay. In our case, the underwriters are looking for proof of income, but we do have programs where we can get around that. So it's typically going to be something like your pay stubs, your W-2s, your tax returns, your assets, if you have any, whatever the case may be. Or we have no doc programs where it's just your credit score, the house, what you do for a living now, or what you're going to be doing. And then we don't have to provide income. So underwriting is usually, depending on the file, it's usually a 48-hour to 72-hour turnaround time. Sometimes it's 24 hours if we don't have to show too much documentation. But it just really comes down to us making sure that we're telling a story that's believable and understandable for them to say yes or no. And that's really the high level of what it comes down to.
Yeah, and I think it's really important what you said that's different about being a mortgage bank is that you can operate with like a surgeon's scalpel. Like you can get into the details versus more of like a commercial bank really has like a chainsaw, and that's their tool. They can be like, oh, we only can look at it this way and we can only carve the story. You know,
Right.
they have a very simple set of tools and very and strict protocols. I mean, really. And
yeah, I mean, you make a great point. The way I like to describe it is, I look at the larger banks, like the true banks, like a Wells Fargo, a Bank of America. I know I keep using the same ones, but I look at them like a cruise ship where they're just doing their thing. If you fit on the boat, cool, we'll have you. If you don't, you can't come on the boat. With us, we're more like a speedboat, right? We can maneuver, we can make moves, we can do things without having to talk to, 50 people up the corporate ladder or whatever the case may be. So we're more on and I'm glad we just talked about underwriting, because what I like to say is we're more on like a make sense underwriting, if you will. If the file makes sense or your scenario makes sense, then we'll write the loan. If it doesn't make sense, how do we make it make sense to write the loan? It's not, you're not getting a loan, so see you later, have a nice day. It's never going to be that with us. If for some reason we can't make the story make sense, we will continue to work with you. We'll continue to educate you. We'll continue to work on your credit. We'll continue to make sure that your assets and your income is in a good position, or it's getting to a good position, whatever the case may be. So please don't ever feel like you're at a point where you just can't get a house, because that's not going to happen. One way, shape, or form will make it happen. It might not be the prettiest thing in the whole world, but again, like we talked about earlier, we'll get you in, and then we'll recorrect it, or we'll fix it and massage it to where it feels much better once you're in. The goal is to get you in a home. Even if it's the same one, how do we make that loan fit your scenario?
or it might be a different home in a year from now or 2 years from now.
Yep.
And having that target of what does it need to look like for you to achieve that goal. So you'll partner with them on
Absolutely.
fantastic. So,
Yep.
well, this has been great. I think, amazing coverage. I think, can you tell a little bit about where to reach you?
Absolutely. I will share my email. I will share my social media accounts if anybody wants to reach out that way. And then obviously, please always feel free to call me on my cell phone, which I'll provide that as well. Do you guys want me to put that in here or just send it over to you?
You can say it now if people
Okay.
are listening, and then we'll also put it in the comments on the post.
Okay. So my direct line, the office line is 818-290-8808, and just ask for me, which is Matthew. Or you can reach me on my cell phone via text or call at any time. It's 310-819-6540. My email is Schwartz. It's SCHWARTZ at nmbnow.com. So it's nationwidemortgagebankers.com, or excuse me, now.com. And I'll put that in there because that's a long email. And then on the socials, I'll put that in there as well. So
we'll add the social part in there.
Cool.
The other thing I want to point out is that Matthew can work across the entire country. From Lila put this in the intro also, but from California to New York City to Florida, Washington, whatever. So if you're watching from anywhere, you can definitely reach out to him. And this is going to also be put on our YouTube channel. We encourage everyone to go out and please subscribe and check out all the other Splitting Smart episodes we have. The other place you should definitely check us out is on our platform at Split.fyi.com. There's lots of video resources, articles, other financial tips to get your credit in place and evaluate the total cost of home ownership, and that are all covered in our platform. So we would love to see you there as well. I think that's us signing off.
Thank you, Matthew.
Thank you, Matthew.
Thank you guys so much for having me today. It was a pleasure. See you later.